Okay, this is the midterm review for our test that we have coming up next week, and I have it separated out by chapter. And here we have chapter. We're going to start with chapter 6. And what you have here is a partial done worksheet, and we're going to record the closing entries, and we're going to update the capital account. Okay, so closing entries, we have 4 of them. The first one is to close the revenue. The second one is to close your expenses. Your third closing entry is to close your drawing. No, I'm sorry. Your third is to close your income summary. And then your fourth entry is to close your drawing or your withdrawal account. Okay, so let's start with the first one, is to close your revenue. Our revenue here is fees income. So this is one we need to close. It has a normal credit balance. So to close it out, we need to debit the account. So we will debit fees income for $23,500, and this is closed out into the income summary account as a credit. Then we're going to close out all of the close out all of the expenses. Oh, there we go, but it's too much. Okay, trying to show more here. Okay. So we need to close out all of our expenses. Our expenses are salaries expense, rent expense, supplies expense, utilities expense, and depreciation expense. You notice these all have debit balances, so to close them out, we need to credit them. Our debit will then be, income summary. And then I'll credit each one. Salaries expense, rent expense, supplies expense, utilities expense, and depreciation expense. Salaries is $11,800 credit. Rent is $1,350. Supplies is $750. Utilities is $850. Depreciation expense is $1,200. If you add all those up, you get $15,950. That is what you debit to income summary. Okay, now let's look at income summary. Okay, does not look like income summary. Okay, income summary has a credit balance of $23,500 from closing the revenue, and then we just debited the account, $15,950. You can see here that our third closing entry is to close income summary. So we need to know what is in here. And what is sitting in income summary is $7,550. So this is the amount that we need to now close, which is our third closing entry. And it has a credit balance. So to zero it out, we need to debit income summary. And we close out income summary into the capital account. And the capital account is J Jameson Capital for $7,550. Our fourth journal entry is to close the drawing account, which has a debit balance of $3,250. If it has a debit balance, we need to credit it to zero it out. We closed it out into the capital account. You can call it drawing or withdrawal account. Both, it's just different companies call it a different name. Okay. And then that's it for the first one. Those are the closing entries. Now to update our capital account, let's look at that. This is the second part to that question. Here's our capital account. It has a credit balance of $33,550. That's what we started with. $33,500. And we credited the account $7,550. Then we debited the account $3,250. The new capital balance is $37,800. So that is the updated capital account. Okay, that is it for Chapter 6. You will only have that one question on the exam for Chapter 6. Now, let's go on to Chapter 7. Get it up here. Okay, Chapter 7. A company sold merchandise for $500 with sales tax of 5%. What is the journal entry? Okay, well, let's calculate how much the merchandise is for. Okay, so it is $500 and sales tax of 5%. So you multiply it by 0.05 and you get $25. So the amount that is given to the company is going to be both the merchandise and the sales tax. So that's $525. The amount that the customer is going to give the merchant is $525. Then the company is going to recognize the sale of $500. And then the sales tax that was returned is going to go into sales tax payable for $25. Number 3, sales were $67,000. Sales returns and allowances was $6,500. What are the net sales? Take the sales of $67,000 and subtract the sales returns and allowances to get a net sales of $60,500. Number 4. A wholesale business sells goods with a list price of $820 and a trade discount of 30%. What is the net price? This is going to be similar to number 2. We're going to take the $820 and multiply it by the 30%. We get $246. Take the 820, subtract the 246 discount, and you get $573 net price. Okay, we did not do Chapter 8. We're going to go on to Chapter 9. And this is the bank reconciliation. We have 2 of these, and you're going to calculate just the book balance. So we have the following information. The book balance is $17,820. An NSF check returned from a customer of $1,400, and then a service charge of $120. Okay, so let's start off with the book balance. This is what we say we have in our account. Now, after we get the bank statement from the bank, we see that there's an NSF check. We had added it to it. This was a deposit for us, but the check bounced, so we have to subtract it from our balance. And then a service charge of $120. Our new balance should be $16,300. This is the adjusted book balance. Okay, 6 is similar. We just have a couple of different things in this one. So we're going to start off the same with our book balance. Of $32,640. Next, we have a non-interest bearing note collected by the bank of $3,900. So the bank collected money from a customer of ours. So I'm going to put here note collected. And this is money due us. We got this money. And then another NSF check like in number 5 for $1,300. Subtract that because we have to take it out of our account because the check bounced. And then a service charge of $90. This will take us to a total of $35,150, and that is our new adjusted book balance. Okay, the only other thing that actually was it for Chapter 9. Now we're going to go to Chapter 10. Chapter 10 and 11 are on payroll. Most of the questions in the midterm are from Chapter 10 and 11. And actually for Chapter 10, we only have 1. And here we have an employee that's paid $13 an hour, and their overtime rate is calculated at 1.5, so time and a half. So let's figure out that. Let's figure out what that is. 13 times 1.5 is $19.50. So regular time, they make $13 an hour. Overtime, they make $19.50. Okay, the employee worked 43 hours. What is his overtime rate? This is the first question. What is overtime rate? $19.50. What is the amount of overtime they earned? Okay, they worked 43 hours, which means it was 40 regular and 3 overtime. So 3 overtime hours at $19.50 gives us $58.50. Okay, so that is their overtime. Now their gross pay, let's calculate that. 40 hours a week at $13 is $520. If you take his regular hours of $520 plus his overtime of $58.50, you get a grand total of $578.50. This is his gross pay. So the first part, what is his overtime rate, is $19.50. The second part is what is the overtime he earned, $58.50. And then what is his gross pay? Number 3, right here is $578.50. Okay, Chapter 11 is also on payroll. Number 8, an employee gets paid $4,000 gross each month. What is your quarterly Medicare payment? Okay, if you remember Medicare, let's take the $4,000. Medicare is at a rate of 1.45%. Move that into decimal form by moving it 2 places to the left. We get $58. So $58 out of the employee's paycheck is for Medicare. Multiply it by 3 months for the quarterly payment. That is $174. Okay, number 9. An employee worked 40 hours 1 week at a rate of $10.87 per hour. Okay, let's calculate that first. 40 hours times the $10.87 is $434.80. That's his gross pay. And here he has following deductions. FIT, which is federal income tax, was $55.70. Social Security is $27. Medicare was $6.30. What is his net pay? Or her, I guess. What is their net pay? $345.80. Okay, we have another one just like that, but this time we're going to add state tax to it. Okay, an employee makes $45,600 per year and gets a monthly paycheck. Okay, so let's figure out what it is every month. We only know what they make for the year, so it's the first thing we have to do. We're going to take the $45,600 and divide it by 12. So they make $3,800 gross monthly. Okay, and then now let's look at their deductions. FIT of $310, SIT, which is state income tax, of $50, Social Security of 6.2%, and that would be 3,800 times 0.062 gives you 235.60. And then we have Medicare is 1.45%, 3,800 times 0.0145, 55.10. This is their net pay. Okay, let's look at the next one. We have 2 sets of employees, office employees and shipping employees. It says the Roland's company has office employees and shipping employees. A summary of their earnings and deductions for the week ended June 14th, 2019. Prepare the journal entry to record the weekly payroll of the firm on June 14th. Okay. There are 2 journal entries that go along with this. The first one is to record all of these expenses and how much we owe the employees. The second one is to actually pay them. Office salaries expense and shipping employees expense. $1,500 and $1,280. $1,500 and $1,280. Their gross earnings goes into the salaries expense account. Okay, then we're going to list out Social Security, and we're going to add the two together. Social Security expense. Oh, I'm sorry. Not Social Security expense. Social Security tax payable. When you add the two together, you get $145.26. Next is Medicare. We're going to take those two numbers and add them together. Medicare tax payable. We're setting up these payables because we collected them for these organizations from their paychecks. We set them into a payable account until we pay them. Next is the income tax. Add the two together. Employee income tax payable, $289. Okay, and then health insurance, $29 each. Health insurance premiums payable is $58. And then the last, this is their net pay. This is also goes into a payable account because this is the amount that we actually owe them. These will go into salaries and wages payable and add those together. Okay, the second journal entry is to pay them. So we will take this salaries and wages payable and debit it because we don't owe it anymore because we're paying it now. And credit cash because we're going to write all the checks. Whoops. Okay, the next one here, we're going to calculate the employer tax. So we have Mr. Z worked 56 hours during the week. He's paid $10 an hour, and overtime is time and a half, 1.5. Okay, let's get that first. Okay, so 50 out of 56 hours, you have 40 of regular, and he gets paid $10. That's $400. Then he has 16 hours that are overtime to equal the 56. Okay, it's time and a half. Let's calculate what that is. $10 an hour times 1.5 is $15. His overtime rate is $15. So we'll take the 16 hours of overtime, multiply it by the $15, and that's 240 hours of overtime. So $640 is his gross pay. his regular and his overtime. OT is overtime. Okay, he has some deductions here. He has $150 withheld for federal income tax, $10 for health insurance. His combined Social Security and Medicare is at 7.65. That is the 1.45 for Medicare and the 6.2% for Social Security. And then federal and state unemployments are 0.6 for federal and 5.4 for state unemployment, FUTA and SUTA. All earnings are taxable. What is the total employer tax expense for Mr. Z's current paycheck? So they're giving you a bunch of information. You're going to have to pick out what is relevant to this. We're only looking for the employer tax expense. That's it. The employee pays some and the employer pays some. Okay. The federal income tax is the employee. So we're not concerned about this because, we're not concerned about this because this is what the employee pays. We only want to know what the employer pays. The $10 for health insurance, that's also an expense for the employee. So we're not worried about that. And, okay, so Social Security, the employee does pay, but the employer matches it. So let's look at that. Social Security and Medicare. Take his $640 and multiply it by 0.765. And that's $48.96. Then we have federal unemployment. The employee does not pay, the employer does pay. So that is FUTA, Federal Unemployment Tax Act. And that is $38.40. So we get a total of $87.36. If you pay the FUTA, then they waive the SUTA. That is the total employer tax expense. Okay, 13. Samantha Rodriguez had gross earnings for the pay period ending 10/15/19 of $48.40. Her total gross earnings as of the end of September was $112,100. Social Security taxes are 6.2%, and there's a maximum of $122,700 per year. After that, you no longer have to pay into Social Security. We need to calculate the Social Security due by her employer from her 10/15 paycheck. She has not met the cap yet. If you take what she has made as of the end of September and you add what she makes every pay period, $48.40, she still does not reach that cap yet. So her full amount of $48.40 is going to be taxed for Social Security. Okay, Roy DeSoto earns a regular salary of $20. He is paid time and a half for anything over 40. He is earning, for the weekend in March, he worked 55 hours. Let's first figure out what his regular pay is. it's $20 times 40 hours is $800 regular pay. And then $20 times 1.5 is $30. This is his overtime rate. He worked 55 hours, which means he has 15 hours of overtime. Take the 15 hours of overtime times his $30 pay, and that's $450 overtime. The $800 of regular pay plus the $450 of overtime is $1,250 gross pay. What is the employer's payroll tax expense? Okay, again, we don't need to know anything other than Social Security and for this one, because this was the employer's tax expense for Roy for that week. Social Security will be the $1,200 times 0.062, and then Medicare is, $1,250. $1,250 times 0.0145. This will be the payroll tax expense. Okay, the payroll register, number 15. The payroll register for Fox Manufacturing Company showed total employee earnings of $40,000 for the week, and they have Social Security and Medicare and FUTA. Assume all items are taxable. Social Security is going to be the $40,000 times the rate. Medicare federal unemployment, state unemployment, so these are the amounts. I'm just adding them up really quick. The total is $54.60. Okay, we are on the last question here. Okay, this is on workers' compensation. And so here we have our estimates. So the first bullet point is our estimates. Our second bullet point is our actual. So let's look at this. Okay, here we have $540,000 per year that the employees are going to earn. And they are 40 cents per $100. So take the 54,000 divided by 100, we get 540. And then multiply it by the 40 cents, which is 0.04, and that's 2160. And this is for the office employees. Now we're going to look at the factory employees. The factory employees are 178,000 divided by 100. And theirs is going to be more. Theirs is $3.70 per 100. If you think about it, factory workers probably have a higher chance of getting hurt than the office employees do. That's why their rate is more. If you add the two together, that's 6,719. 40. This is the estimate there. Whoops, I'm so sorry. Nope, that's wrong. I'm going to go back. Okay, times 370. This is 6586. Okay. 6607.60. Okay, now let's look at what actually happened. This is the estimated, remember. So here they actually were 56,000 for office and 181 for factory. So we're going to do this again using the actual numbers, because you pay in advance and you're not really sure how much the employees are going to earn. So you have your estimated, and then you reconcile it at the end. And that's what we're doing now, is we're looking at what actually happened after the fact and making the adjustments. Okay, this one is the estimated, and this is the actual. Okay, take the if you take what the actual was and subtract what the estimated was, you get $111.80. This is what we need to reconcile. So on January 12th, the journal entry is going to be, it's a long one, a long account. Workers' compensation insurance expense. Yes or no? And then the one at the end of the year, to reconcile it, we owe an additional $111. So we have to add the $111 to the expense, and we owe this to workers' comp. So it's going to go into workers' comp insurance payable until we pay it. Okay, so that is the review. If you guys have any questions, please, by all means, let me know. Okay, Good luck, you guys. You'll do fine.